All right, I'm gonna go over the opportunities that were. Oh shit! This is a reversal trade right here. This is a sell. I didn't even realize. Sell it back to take out this low. This is a sell. Up, down. No volume. Let's see this. It's a sell. It's either going to take out this low or take out this low. You'll see. Watch. That's, I don't know, whatever. Anyway, so where was I? What day is today? 3/2. So this is on crude. 3/2. Climaxed up here, sideways bullshit. Now I'm gonna take out this low, and then come back in this area. It's gonna take out this low. It should take out this low. And here, so on crude, all right. Let me try to explain something. On the left-hand side here, you have the 3-hour chart. On the middle, you have the crude Renko, and on the right, you have 5-minute. So one of the strategies that I use to clearly see the market is Renko, but not just Renko like boxes or bricks or whatever. They don't mean anything to me. All right, I want to see the wicks. So Renko usually without wicks, but you can add wicks to it. And two, I want to have the volume. What Renko does, it actually profiles a rally. All right, so let me just explain. You know, you have a rally, right? A lot of times, instead of profiling a session or a day or whatever, I want to profile a rally. I don't, it's not just about profiling a session or visible range on a chart, but a rally. I want to see where in that rally is a good area to buy a pullback where there should be a reaction. So how do you do that? Yeah, you use a volume profile that's flexible and you can put it on from a low to a high of a swing, but it is very important to be able to chop up the rally, chop it up, and see where the volumes are. So it really nicely chops up a rally and shows you where the volumes are, and religiously you will see that the pullbacks go to two areas, because those are where the smart money is. I mean, they'll defend those areas. One is the test of the breakout, and the other is the accumulation area. So in crude, where's the accumulation area? I'll show you right now. Market's going down, 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 and then what? Look at this. How interesting. The biggest volume in 100 bricks right there. What does it do? It changes the trend. It changes the trend. All right? What happens when it gets tested? It defends. Why? Because smart money bought it. Why? How do you know? Biggest volume in 100 bricks with follow through. I mean, no brainer, right? I messed up on some of the signals. I have to fix that, but whatever. All right, now when it comes back, where do the smart money defend and continue to buy? At the accumulation brick, the accumulation, test of accumulation, buy it up. Then it goes up. There's some selling, goes up. It can't get through resistance. So where will it test? It will test again the accumulation or the reaccumulation brick right there. How do I know? Look at the volume, it increased, right? It's the most amount of volume in the entire 4 bricks. It gets tested, up, down. Here is your effort to go down. An effort to go down is just bag holding, and bag holding is a form of accumulation. How do you know increase in volume, biggest volume in the last 6 bricks? What happens after they buy it? We're going to label it. All right. Then it goes and it breaks out. Where does it break out? Above resistance. They press. After reaccumulating this area, they press. Boom. Goes up. Sellers come in. What happens? The breakout get tested. It tested and it holds. What happens? Buying. Right there. The increasing volume of 14 bricks. Pull back. A little bit of bag holding here. And now it goes. This accumulation brick I have to fix. It's not really accumulation brick. I don't know why the hell I put it there. But it's actually the brick before it was a reaccumulation. So maybe I didn't put it in the right place. But the idea is this reaccumulation here and here. The 6 and the 4, which is the biggest amount of volume in the last 4 bricks. And then it goes. Is there a breakout? Somewhat. I mean, there's somewhat. Not that crazy. Where is the breakout? It has a little bit of follow through, so just a little bit careful, because that right there is the biggest volume in the last 7 bricks and takes out the highs. And what's bad is though that the next brick after that has a lot of volume, but it basically up thrust and it's coming back down. It should hold this area or come back to pull on the accumulation brick, where I'm going to be watching it like a hawk, because that's where if the buyers are still there, that's where they're going to come in. And you'll see they'll come in. So this method of reading the Renko, it really is so simple. I don't know what to call it. I mean, I guess you could call it tape reading. It's really chart reading, but it's very simplified, where you only have 3 behaviors, right, that you want to be aware of and just see what happens on their test. I really think this is one of the best discoveries. And also, it wasn't founded by me, by the way. It was founded by David Weiss, and I learned it. So, I mean, and I just kind of extended it with accumulation bricks and all that, and the distribution bricks. But these 3 behaviors, all you needed to understand is the breakout brick, the accumulation brick, the distribution brick, right, and the climax. Why? Because breakout brick get tested, accumulation brick get tested, distribution brick get tested. Why is it important? That's where you find trades. That is where you find trades. And climax brick is just basically that's where the move is done. And then it basically goes into a distribution brick and bring it back down. So this is a very easy way of reading a chart and understanding what the hell's going on, right? So, and it can be combined with volume profile to like a sniper sharp shoot those points in the breakout accumulation brick where there should be a turn, and it works very nicely. Because without this, if you have time-based charts, it's like really up, down, up, down, up, down, up, down. It's going to be very hard to understand time-based charts. Like, I'll give you an example. If you take a look at this shit right here, right? This whole thing up, down, up, down, up, down, up, down, and then it goes down and then it goes up. Like, what the hell? Right? So all that is because of time. Time, who knows what they're doing here, right? Might be doing nothing or just keeping it in a range to then spring this low and then make the high. So all of that is a pain in the ass. And you can see it's just one brick. Clean. This was, as it was explained to me, Renko gives you peace of mind, quote unquote. And also I believe that there's a structure of accumulation, breakout, rally, and then distribution, breakdown, rally, and then pull back, offers the trade opportunity. And it's a wonderful way of clearly seeing the market. I hope you guys in the Wyckoff community take a look into this, and you will see the benefits of this. And if you see this framework that I've put of just identifying those bricks, it will really simplify reading a chart. Because the only three things, you have breakout, accumulation break, distribution break, then it climaxes, right? And they're tests. Isn't that an easier way to see things versus looking at all the various candlestick patterns and trying to make sense of what's going on a chart? And I mean, look at how clean this is. Rally 1, 2, 3, 4, 5. It rallies 1, 2, 3. Let's see what happened on pullback. Rally 1, 2, 3, 4. Pull back. Rally. Pull back. Done. So this is, I think, the it simplifies a lot of things. If I showed you this 10 right up here, right? You see, that's the biggest brick in the last 10 bricks. No, 20 up bricks. The biggest in 20 up bricks and 12 consecutive bricks. It is caused by the volume that's in this fucker right here, right? So what do you think this is? All this going sideways, shoots up and then goes down. Obviously some type of liquidity generation or whatever you want to call it, and then they do a liquidity grab and then break. Or in Wyckoff terms, there's just some distributions, up thrust after distributions, sign of weakness. Now, this market showing this change of behavior should drop. I wouldn't be surprised if they definitely going to take out this low. This low right here, right? So this low is going to be taken. I mean, that's that spring low that's going to get taken. Because you know why? The former lows here were already taken. So, I mean, from a bullish perspective, it would need to hold this area, this 6 right here. That the bulls, they might try to hold it from a bullish perspective. This area right here, which is this low, they might try to hold it. All right, they might try to hold it. It might react, but that's still, look, it's like 30, I don't know, 30 plus ticks or something. 38 ticks, easy 38 ticks right now. Right now, easy 38 ticks. Maybe, I don't know what it is. Yeah, let's say about 30 ticks. So then maybe they might, but I think it's going to go deeper. Anyway, and this is also one of my favorite things to see. All this shit, up, down, up, down, up, down, up, and then break. It's really I don't know, classic. I think maybe that's the word. All right, so let's just mark these areas so you understand the read. Accumulation break, makes sense here. That's your accumulation break, that's accumulation break, breakout break, that's your climax break. After the climax break, it goes down, reaccumulated some more. Where? Against the breakout area. Obviously, some more accumulation break. And make it really simple. Accumulation means buying, distribution means selling. That's it. And you have breakout. So there's actually a breakout break. This would qualify as a breakout break. It's going to hold. Let's see. Climax break right here. Real easy, folks. So this is one of the key reasons why I use Renko. I don't know any other chart that can simplify things the way Renko with volume can. And using the framework that I've just explained here, it will really just make you focused on where to find trades and see on a lower time frame whether there's a turning point there. And that's it. I don't know how else to make it more simple than that. All right. All right. That's all, folks. Take care.